Earnings season gets underway Monday with Citigroup reporting and JP Morgan and Goldman Sachs, some of the names reporting for the second quarter on Tuesday. How do the financials and corporate America look amid trade tensions and a Federal Reserve that may be accommodative? We bring in Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Doug, how do earnings look to you?
They look okay. I think that the expectations are really low, so that bodes well for perhaps a slight increase, but the market's expecting basically flat, so anything positive is going to be good.
No decline. I mean, we got that major warning from the world's #1 chemical maker, BASF, yesterday, but that is sending ripple effects that this global economy could not only be slowing down, but really grinding to a halt.
I think that just gives President Trump what he wants through the Fed to get rates lower, which is what we're basically going to see unless we get a trade deal. We're going to see rates lower. It's like a 92% chance we're going to get a quarter rate cut and an 8% chance we're going to get a 50 basis point cut. But this sets us up really well by third or fourth quarter earnings to be all-time high in earnings, which earnings equates to the market. And that's where we're going, even if we have a little bit of a dip here to allow them to lower rates this one time.
Do you think the Fed will be one and done with its strategy of potentially cutting rates tomorrow? Or
I mean, it's possible if they do it deep enough. And I think things are going to turn positive later in the year, and that's going to mean that they don't really have to lower rates. Look, if you had 20% personal earnings increases last year and a 5% raise this year, 5% versus 20 sounds terrible. But it's still 5 on top of 20. Right. And that's what I think people are missing. We're still growing, even though we might be slowing a little bit.
And I'm asking about the rates because interest rates it basically affects the input costs for so many companies. It lowers them. So lower rates are great for corporate America, but do we need the cut at this point?
I personally don't think we need the cut. I think the market and the companies, they're just beginning to get the effect of the tax cuts. That's going to bode really well to increase an all-time high earnings by the end of the year for the companies, and therefore right into the market.
And quickly here, which sectors do you think will do better?
I think healthcare has underperformed the market so badly and is set up so well for probably an outperformance over the next year. That's the area that I would look at, and that's a little bit scary to people, but that's where the opportunity lies.
Doug Flynn, thank you very much.
You're very welcome.